Hey, welcome back to The Dive. Today on the show, we're joined by Sue Ennis from Hut8 Mining. But before we get into it, smash that subscribe button for me. Hey Sue, welcome to The Dive.
Hi, thank you so much for having me. Really excited to be here chatting with you and your audience today.
Yes, we're so excited to have you too. Okay, so Sue, as we do with all of our new guests, what is the 2-minute elevator pitch for Hut8 Mining Corp?
So Hut8 Mining, we are one of the oldest and largest digital asset and Bitcoin miners in the Western Hemisphere. And we're effectively three Bitcoin and blockchain-based businesses in one trade. So profitable digital asset mining, we have a white label hosting business, and then we also earn yield and revenue on our tremendous amount of held Bitcoin. And we actually have the highest amount of self-mined Bitcoin of any publicly traded company in the world.
Wow, that's amazing. Okay, so Hut8 is known for its hodl strategy. How do you maintain sufficient capital capacity to avoid forced sales or meet unexpected liquidity needs?
Yeah. So we certainly, for example, in crypto winter of 2020, we had a little over 2,500 Bitcoin on our balance sheet, and that actually enabled us to take out a loan against that asset as collateral during the crypto winter of 2020, and that certainly helped us keep the lights on. We did a raise in early 2021, but fundamentally, a lot of our focus is on building out ancillary lines of business revenue that earn us fiat so that we can ultimately keep the lights on and continue to do what we do. And that's where, as I mentioned earlier, we have a profitable hosting line of business, and we also earn yield and some revenue on our reserve assets of Bitcoin. We have 2,000 Bitcoin that's currently earning 4% yield in two different accounts, one with Galaxy, one with Genesis. So building out that ancillary revenue enables us to continue to mine and hold as much as possible of this truly what we see as reserve asset of the future. But I mean, we're not going to hold or hodl forever. We certainly do see a case, where it may make sense to sell some of our Bitcoin. But for now, given sort of the macroeconomic factors at play, things like El Salvador adopting the institutional eyes and money that we're seeing flow into the space, we definitely think, and obviously, this sort of very dovish policy that continues to come out from governments throughout the world, we certainly think it makes sense to hang on to as much of this asset as we can for now.
Yeah, makes sense. Very cool. Okay, so the company recently announced a production update for August 2021 with an average daily production of 10.5 Bitcoin. What improvements did you do to obtain these results?
So it was really like a confluence of factors. Number one, we have a laddered fleet. So we have a multi-legacy, multi-generational fleet, which means that even some of our most depreciated equipment is actually mining and in the money and incredibly profitable right now. We also had some new and more efficient miners come in and get installed. But most importantly, what was a really big change in the industry and super, a huge boon and benefit for us North American miners was the Chinese mining exodus. So for those of your audience who may not know, China, effectively, the government there shut down Bitcoin mining altogether, or more or less altogether, which means that a tremendous amount of hash rate of the global Bitcoin network was up for grabs. So that was extremely beneficial for North American miners. So any of us who were, up and running already, effectively were able to, clip some more Bitcoin than usual. It's been a really exciting time to be a Bitcoin miner.
Very cool. Okay, so Hut8, as you mentioned, closed a public offering on June 15th, 2021, raising gross proceeds of $150 million. Where will the proceeds be used?
Yeah. So a couple of different places. We put some money towards a rate buy down of a very competitive power contract and a new site that we're standing up in Q4. So we effectively have partnered with a company called Validus Power and have done a PPA of about less than 3 cents Canadian all in per kilowatt hour. So that is one of the lowest rates in the Western Hemisphere. And when power is the main input of your business, it makes a very big deal that you obviously control those costs. And again, it's an all-inclusive pricing. We haven't seen rates lower than that anywhere else in the industry. So we're really excited about that. So certainly some of that raise went towards that. As I mentioned earlier, we picked up about an extra exahash, so about 12,000 machines of new equipment that initially was going to go to China, but that contract was canceled. So we were able to snag that. So the money is definitely going towards paying that. We also made this very interesting purchase of these NVIDIA GPU miners. So GPU mining is another iteration of digital asset mining. It's different from mining Bitcoin. But these are we actually were one of 3 global customers who were able to get this very limited fleet from NVIDIA of these GPU miners. And the strategy there is we're going to mine Ethereum, but then get paid out in Bitcoin on the pool level. And that's going to help us earn Bitcoin, an extra about 2 to 3 Bitcoin per day for less than $3,000 Canadian. And so definitely some of the money is going to be going towards that, because again, the profit margins are tremendous if you're thinking that, we're earning a coin for less than $3,000 Canadian, but it's trading in the market for 49, I think it's at $47,000 today. So we're really excited about that margin profile, and also the fact that this equipment in total takes up about 3 megawatts of power. So it's extraordinarily efficient, and it also enables us to pivot into other iterations of high performance compute, because the servers that they sit in can be repurposed for traditional HPC activities like machine learning, AI, rendering. So to answer your question in a long-winded way, that the raised money is also going towards paying down those machines as well, and the servers that they sit in that can be repurposed. And just goes back to our whole thesis and narrative and goals of having as many ancillary lines of business revenue as possible, so that we can pivot and effectively still grow shareholder value if we do hit another bear market, because it is a very volatile industry, obviously. So we see definitely some benefits as to raising capital and being very thoughtful about how we deploy it to diversify our business as much as possible.
Okay, so as you mentioned, you recently embarked on the Ethereum network mining. What drew you to Ethereum, and how did you position the company when EIP 1559 was being implemented?
Yeah, so before we bought these NVIDIA GPU miners, we did all of our modeling with EIP 1559 in mind, and with I'm not sure how much your audience may know about this, but there is also quite a bit around Ethereum moving to proof of stake, which certainly changes the network dynamics and the profitability for Ethereum miners. But we ran the models, and we thought this purchase still made sense. What we love about Ethereum is the fact that it really is a real backbone of Web 3.0. So if you look at Bitcoin as digital gold, we look at Ethereum as the TCP/IP. So effectively, if you look at TCP/IP as the foundation of the internet and what Google and Facebook built upon, that's how we sort of look at Ethereum, and the availability and true, swath of applications that are being built on it, especially in the decentralized finance space, which is another real area of disruption that we see coming in the traditional financial sector, all built on Ethereum, but also other protocols. Point is, these GPU miners enable us to play thoughtfully and to mine thoughtfully, and even participate in some of the sort of ancillary lines of business that and revenue opportunities that are available in the Ethereum and decentralized finance space.
Cool. Okay, so the newly passed U.S. infrastructure bill includes increased tax regulations on crypto wallet developers and miners. What impact do you think this will have on companies like Hut 8?
Yeah, so we actually have a head of regulation because we think it is incredibly important for miners and any sort of large companies in the crypto space, and who are working on proliferating and forwarding the ecosystem, to have constructive relationships with the government to make sure that thoughtful innovation is coming down the pipeline, and that laws that have existed for hundreds of years aren't being applied to nascent technology. My understanding of the infrastructure bill now is that there has been some tweaking of the language so that developers and miners won't be covered as crypto brokers. But again, I think that it's still sort of being fleshed out as to to where that's all going to land. So look, right now, because we're a Canadian operation, we're very thankful to be in Alberta, and that right now we don't see these sort of very blanket and strategically myopic laws come down in Canada yet. But there is the risk of, copycat behavior in the Canadian government. So back to what I was saying earlier, we think it's really important to have constructive conversations with government, to provide them with ideas and frameworks in order to regulate this space thoughtfully that still fosters innovation. So for now, we think we're okay being Canadian domiciled, but there definitely is risk of potential copycat behavior. But again, it's all about just making sure you're pushing local legislators to think a little bit more strategically just about the opportunity that digital assets and mining have in Canada from an income and innovation perspective.
Yeah, absolutely. And the Canadian federal election is approaching. How does Hut 8 view the election in terms of the overall impact on the crypto space?
Yeah, so we have been doing quite a bit of lobbying and speaking with certainly local council on the ground where we are in Alberta. And we're really lucky to be in Alberta because it is a traditionally oil and gas province. So they're very comfortable with, like mining and they're actually quite accommodative to the innovation and jobs and income that we bring. So certainly, we've been really active just in terms of engaging with regulators, speaking with regulators. We've certainly presented some business cases as to, actually educating them on what Bitcoin is and what this technology is, so that there isn't this sort of blanketed, oh, it's used in dark markets and you can't see what anyone is doing. Like, we're really focused on education so that these policymakers can be a bit more thoughtful in terms of how they try and create frameworks around this asset class and this industry.
Definitely. Okay, so one more thing before we let you go here. What should investors look for in Hut 8 for the rest of the year?
So it's a really exciting time for us. Like I said, we've got 3 incredibly profitable Bitcoin and blockchain businesses all in one trade. And we're continuing to scale and grow. And, I'm available anytime to chat. I'm at Big Suey on Twitter. Please send me a DM if you ever want to know about sort of a deeper dive into the Hut 8 story. But yeah, I think you're going to continue to see us be one of the absolute leaders in Bitcoin mining and this reserve asset of the future, and bringing forward Web 3.0 and the 4th industrial revolution.
All right, great. Well, I can't wait to see what you guys do, and we'll definitely have you back. Thanks for joining us, Sue.
Thank you so much for having me. Love your show. Bye.
Thanks for watching. We'll be back again tomorrow. But in the meantime, throw us a like.